Guys, Apple reporting earnings per share of $3.03 versus expectations of $2.84. Revenue is also better than expected at $64 billion. The street was at $63 billion. Gross margins 38%. By segment, iPhone revenue $33.36 billion. That is better than expected. The street was looking for closer to $32.4 billion. iPhone revenue down at 9% in the quarter, but remember, that is a sequential improvement. iPad revenue $4.7 billion. Mac revenue $7 billion. Wearables, home, and accessories, that is also better than expected at $6.5 billion. Services revenue up 18% to $12.51 billion. The street was looking for something closer to $12.2 billion, and services margins in the quarter 64.1%. As for that all-important Q1 guide, Apple says to look for between $85.5 and $89.5 billion. The street was at $87 billion, and they're forecasting margins here between 37.5 and 38.5%. And one last metric I'll tell you guys, Greater China revenue down 2%, though that is also a sequential improvement. Back to you guys.
Josh, thanks so much for that. John, let's get to you for your immediate take. I mean, clearly it's a nice little beat on every line.
Yeah.
Some of the analysts saying the guide is more important for the all-important quarter to come, but either way, that was not a miss. So
the midpoint of the guide is $87.5 billion. Even if you think that the consensus was 87, that's better. And to have 89.5 at the high end, Apple is generally pretty conservative with this, so that is going to make some people happy, as you can see with the after-hours trade-off.
Yeah, I think Apple pretty conservative and also probably wants to be pretty careful about the guide, given what happened last year. So, you could almost say that they might even be extra conservative about the fourth quarter guide, which, of course, is 1/3 of the way over the quarter they're guiding for.
And when you think about the rally we've seen in the shares, you've seen all-time highs recently. I mean, it really kind of speaks to how high the bar was in terms of expectations coming into these numbers.
Which is why on a very good numbers across the board, you're getting a 3%, bump, which is fine, except it probably would be otherwise bigger. It's up 40% in the last 5 months, the stock is. Very similar, by the way, to the ramp it had into the 2018 high, but now the numbers are coming through for it.
And that gross margin guide is pretty nice, too.
Yeah.
It's strong.
Let's get back to Josh Lipton for more on Apple's results. Josh.
So, Morgan, I did have the chance to catch up with CEO Tim Cook. We talked about a number of issues, and obviously we touched on tariffs and trade tensions. A couple questions I had for Cook. One is there had been some talk about had he been shipping in more iPhones here into the U.S. than usual to try to get ahead of those potential tariffs coming in mid-December. Cook categorically saying he has not been doing that, nor does he intend to. As for trade tensions more generally, Cook telling me that he remains optimistic, says I'm still optimistic, as I've been the whole time, that in the end there will be an agreement between the countries where it will not solve everything. It will be better positioned than we are and where we have been. We factor that into our guidance. Another issue, I mentioned quickly how Greater China revenue, that was down 2%. That was a sequential improvement. Remember, in Q3, it had been down 4%. And actually, in constant currency, revenue that was up 1% in the quarter. One issue we've had a lot of analysts come out on our network and talk about is, will it be a problem in China when you have the locals like Huawei now coming out with 5G handsets? More Chinese vendors by the end of the year will have them. I asked Cook, did he see any evidence that that was having an impact on Chinese consumers, perhaps wanting to go with the local team, those 5G handsets, not his products? Cook saying he saw no evidence of that in the quarter. And he said the network is more nascent right now anyway, and we want the customer, in his words, to have a great experience always. That means great battery life. We feel really good about the position we are in.